Namaste, my dear friends. Duty drawback. Now I'm referring to you where we have broadly two separate sections, section 74 as well as section 75. Section 75 duty drawback talks about duty paid on imported goods can be claimed as a duty drawback if we re-export the same goods, provided I should not have been claimed refund under section 26A. See, refund claiming, duty drawback claiming for one transaction, not a allowed practice, which is a fraudulent activity. Therefore, duty paid and imported goods, I have not claimed refund. Now I re-exported back that goods, same goods, within the time period permissible to me. If so, on account of re-export of imported goods, duty paid and import goods can be asked for duty drawback, section 74. On the other hand, we have one more section, section 75, where I export the goods. For my exports, there is no history of import. I may import the raw material, but raw material I am not exporting. Finished goods only I am exporting. Duty drawback, only export of goods, not a re-export, export of goods. In that case, section 75, duty drawback, separate category. Let us concentrate on this particular section 74. Re-export of duty paid on imported goods. If you refer that, my dear, first you have to understand what for imported. Goods are imported by the importer for business purpose. Goods are imported for personal purpose. No, sir, I imported for business purpose, sir. In that case, have you used in the business? After that, you exporting back the same product, or without use itself, you exporting back the same product. Sir, after use only I am exporting back, sir. The same what I imported, I use quite for some time in my factory for my manufacturing. And the same what I am now exporting back because I want to modernize the technology, artificial intelligence technology I want to adopt. Therefore, the machinery what I imported by payment of import duty, which now I am exporting back to my supplier, returning back to my supplier. In that case, duty paid on imported that goods, I can ask for refund. Even after use in my premises, the product which I am exporting back, no problem. Duty paid on imported goods will be qualified for refund on re-export. Within which period you have to re-export? Sir, within 3 months I am re-exporting, sir. Then 95% of the duty paid on such imported goods will be allowed as a duty drawback. Sir, if I exported after 6 months from the date of payment of import duty, in that case, 85% of the duty paid by you will be qualified for a refund. Not refund, a duty drawback, which is also amount going to get credited into your electronic, your bank account. Sir, what is the difference between the refund and duty drawback? Then in that case, refund is 100% what I paid I can also get back. But duty drawback, I never going to get what I paid 100% I cannot get duty drawback. Therefore, duty drawback is one way or the other rebate of duty. Rebate of duty is duty drawback. Refund of duty, duty paid by me, I can ask for refund. The person who paid the duty only can ask for refund. Duty drawback can be asked by any person who will fulfill the exports and who may be sufferer of the tax or not. The person who entered into claim duty drawback on account of satisfying the conditions, he can get, but not exactly what they paid. Exactly what they paid duty wanted to get back, that will be take a mode of refund. So refund is different, duty drawback is different, though both are one way or the other going to be credited into the account of the bank account of the applicant who want for this particular benefit, who is eligible for this benefit. Now please come back. Duty drawback I suffered, out of which 95% will allowed if I re-export after use within 3 months from the date of import, from the date of payment of import duty. If within 6 months, 85%. Within 9 months, 75%. Thereafter, within 12 months, 70%. Within 15 months, 65%. Within 18 months, then it is 60%. Part of the month also be full month. 95, 85, 75. Thereafter, 70, 65, 60. In that manner, you have to adapt this. By heart difficult. Every 3 months, reduction. First 3 months, 95. Thereafter, 3 months, 85. Thereafter, 75. Thereafter, 70, 65, 60. Each 3 months. After expiry of 18 months from the date of payment of import duty, I want to export back after use. Duty back not allowed. Time limit is there. Sir, if I exporting without use, I imported for personal purposes, sir, but exporting back without use, sir. In that case, have you export immediately? Within 2 years you exported back before use from the payment of import duty. Within 2 years you exported back? Yes, sir. Have you used? Not really used, sir. How can you say? See, the seal itself not opened, sir. What condition I imported? Same condition the machine is there, same condition the goods are there with the pack. I have not at all used. In that case, re-exporting within 2 years from the date of payment of import duty. In that case, the rate of duty drawback is 98% is the duty suffered by me. 98% if I export back within 2 years. Dear friends, now if the problem does not specify whether I imported for my business purpose or my personal purpose, nothing specified, you take the category of 74, imported for business purpose. If they specifically said imported for the personal purposes, then you have to come here. If the goods are imported for personal purposes by payment of import duty, that is exporting back without use immediately. Immediately means personal purpose immediately means almost all before clearing the goods for home consumption is the meaning of it. In that case, I already paid import duty and I have not used for my personal purposes, which is I am exporting back immediately, means maybe in a couple of days of payment of import duty. In that case, duty paid on such imported goods on account of re-export, I am eligible to claim 98% of the duty as my duty drawback, provided I should not have claimed refund under section 26 capital A. I told you sometimes before, refund of duty. There I should not avail the refund. Suppose if I import the goods for personal purposes by payment of import duty and quite for some time I use for my personal purposes, now I dislike, I am exporting back. From whom I have been purchased to whom I am exporting back, returning back. In that case, after use, then here, year 1, you are aware of that, here year 1 and here year 2, here year 3, year 4. So spread over for 4 years. For the first 2 years, you wanted to export back after use, no need of permission from CBIC. Third year or fourth year, you are going to export back after use. Duty drawback is allowed only with the prior approval of the CBIC, prior permission required to apply for duty drawback. Now, this 1 year count reckon from which date? From the date of payment of import duty. 1 year. 1 year means 4 quarters. First 1 year, 4% reduction. 100 minus 4, 96. First quarter, 96. Second quarter, 92. 4% reduction. First 4 quarters of the first year, 4% reduction. Second year, for 4 quarters, 3% reduction. Third year, for each quarter, for 4 quarters, 2.5% reduction. Fourth year, 2% reduction. So, first year, 4% reduction. Second year, 3% reduction. Third year, 2.5% reduction. Then, fourth year, 2% reduction. Start with 96, ends with 54. Remember is 4% reduction for the first 4 quarters. Next 4 quarters, 3% reduction. Next 4 quarters, a 2.5% reduction. Next 2% reduction. Part of the course full quarter. Count reckon 1 year, first quarter, 1 year. Count reckon from the date of payment of import duty to 4 quarters. Next 4 quarters. Next 4 quarters. Next 4 quarters. After 4 years we are exporting, no drawback. First 2 years, without any prior approval of the CBIC, you can apply duty drawback. Third year, fourth year, you want to apply duty drawback, you have to apply with the prior approval of the CBIC. Then refund will be granted. Duty drawback will be granted. The manner of granting refund: first year, each quarter 4% reduction. Second year, each quarter 3% reduction. Third year, 2.5% per quarter, each quarter reduction. Fourth year, 2% reduction each quarter. How this can be able to address in the examination point of view? Now I am going to bring to notice one examination problem is as follows. Before going for problem on duty drawback under section 74, I would like to bring to notice some more points under this section 74 only. Here, duty drawback on re-export not allowed. Wearing apparels, if I am re-exporting after payment of import duty, then duty drawback not allowed. Unless I export without being used. That means wearing apparel paid duty on import. If I export back without use, duty drawback is allowed. After wearing apparel use and export back, no duty drawback. Tea chest. What do you mean by tea chest? The tea powder stuffing in a particular box is called tea chest. Such boxes are imported by payment of import duty. Then I am exporting back same. Duty drawback not allowed. Expose cinema photographic film passed by the Board of Film Censor in India. Sir, I imported Harry Potter movie. Harry Potter movie I imported. Jurassic Park movie I imported. I paid import duty. After exhibiting in cinema theaters here, the same film I am exporting back. Sir, duty paid on import goods. Can I claim duty back? Not allowed. Because the purpose you have been solved here and exporting back. Duty back not allowed. Unexposed photographic films, paper and plates and X-ray films, duty drawback not allowed. Even you paid import duty and exporting back the same, duty drawback is not allowed. Also, duty drawback not allowed more than the duty paid on imported goods. On imported goods, I paid duty 2 lakh rupees. I'm exporting back that same product with a dubious value, claiming duty drawback 3 lakhs. Not only you paid duty itself 2 lakhs. How can you export more than the duty drawback, more than the duty what you paid on import as duty drawback? You cannot. So these are the points should keep in mind. And bringing to notice here a problem in this regard from the workbook. Yes, very clear it is. Duty drawback is not allowed if the market value of the exported goods, what you are re-exporting, is less than duty drawback amount. I mean to say that I am going to claim duty drawback 1,50,000. Very good. Duty drawback you are claiming 1,50,000. Okay. What is the market value of the goods? Sir, market value of the goods rupees 60,000. Hey, mister, the worth of the goods is 60,000. How dare you to claim duty drawback of 1,50,000? Duty drawback exceeds the market value of the goods. It's a fraud case. Single rupee drawback not allowed. Keeping this into account, referring a particular RTP question it is. Reading as follows. Calculate the amount of duty drawback allowable under the Customs Act in the following cases. Jaggi Mehta imported a car from UK for his personal use and paid 4,50,000 as import duty. However, the car is re-exported immediately without bringing it into use. B. Meenakshi imported a music player from Dubai and paid 12,000 rupees as import duty. She used it for 4 months but re-exported the same after 4 months. XYZ Limited exported 1 kg of metal, FOB value 1 lakh. Rate of duty drawback on such export is 60 rupees per kg. Market price of the goods is rupees 40,000 in the wholesale market. So if that is the case, they are asking us to find out the duty drawback amount. Now, Jaggi Mehta imported. What is imported, re-exported? Paid imported how much? 4,50,000. If so, what percentage is equal to duty drawback amount? Is equal to 98%. How much comes? 4,41,000 is the amount of duty drawback. First case. Second case, Meenakshi imported a music player from Dubai and paid 12,000 rupees as import duty. She used it for 4 months but re-exported the same after 4 months. That means if nothing specified, import is for business purpose or personal purposes. We should assume what? Business purpose. Excellent. Hats off to that particular answer. Now, if import, see, business purpose. After use, she exporting back. If so, we have the 3 months concept. Within 3 months, if you export back, you can prepare like this statement. Like this, you can prepare. Here, within 3 months, exporting back is equal to what? 95%. If exporting within 6 months range, 85%. Within 9 months, 75. Like that you can prepare in the exam also. Within 12 months, 70. Within 15 months, 65. Within 18 months, it is 60. Beyond 18 months, not allowed. Now, she exporting back within which period? Within 4 months. 4 months, this range, correct? If so, 12,000 into 85%. Duty drawback amount is equal to how much? Yes, 10,200. It is a RTP problem. Thereafter, point number C comes into picture. What it says? Point number C says 1000 cases of metal of FOB value 1 lakh, rate of duty drawback 40,000. So rate of duty drawback is 60 rupees per kg. So 1000 kgs into 60 rupees. Duty drawback amount they are trying to claim how much? 60,000. Duty drawback. The value of the goods how much? Market value of the goods is rupees 40,000. How dare you to ask duty drawback more than the value of the goods? Therefore, in the given case, hey XYZ Limited, you are a fraud guy. Duty drawback not allowed. Single rupee not allowed. No duty drawback in the given case. Is a way in which solution is available for your kind consideration in the workbook. Workbook is a helping tool, my dear friends. Don't feel is a expenditure for you. Is your investment. A workbook of mine, I have been given full attention, full dedication with all amendments available. Almost all I mold into problem to make you understand the provision I brought into the workbook. So workbook is very important. If you're not having, I recommend you to have workbook. Any doubt, I am responsible. I am going to be clarified to you. Now please come back. With this, we understand section 75 category. We understood this category. Now coming to section 75. Duty drawback, section 75. There are 3 types of duty drawback on account of export. One is called all industry duty drawback. 2, bond rate of duty drawback. 3, special bond rate of duty drawback. When the all industry duty drawback is applicable means my exported product named all industry duty drawback applicable list, general goods, cloth, pen, paper, water bottle, drinking water bottle, laptop, general goods which I am exporting, is one can able to find the all industry duty drawback rate applicable list. Then all industry duty drawback rate is applicable. If my exporting product altogether a new product, innovative product which has its own importance like diamond, HIV medicine, against a specific order only we are exporting. In such cases, that nomenclature generally not able to come across all industry duty drawback rate applicable list, for which bond rate of duty drawback is applicable. Now, when the special bond rate of duty drawback will come into picture means I exported the goods, my dear, under all industry duty drawback rate I apply and I export the goods. My duty drawback amount what I am getting is less than or equal to, in fact I can say that here it is less than 80% of duty already suffered by me. I suffered the duty on account of import of raw material, 2 lakh rupees duty I suffered. Now I am exporting the finished goods. All industry duty drawback rate is applicable. I am getting duty drawback how much? Only 1,50,000. Oh, how much duty suffered by you at the time of import? 2 lakh rupees. Now how much duty drawback you are getting? 1,50,000. 1,50,000 rupees you are getting means out of 2 lakh, what is the percentage of recovery? 75%, which is less than 80%. In such case, if you apply all industry duty drawback rate, where the duty drawback amount is less than 80% of the duty already suffered by you. In such case, you please apply for the want of special brand rate of duty drawback. The department will take care to give the duty drawback at least to cover 80+% of duty suffered by you. But one thing is very clear, Mr. Exporter. When you export the goods, you should submit the shipping bill. Yes, sir. While submitting the shipping bill, you should consider duty drawback which one you want. You want brand rate, you want special brand rate, you want all industry, you have to mention. Once you mention the duty drawback, all industry duty drawback I want, you mention and submit the bill of entry. I mean to say shipping bill. In the shipping bill, you submitted, I want all industry drawback rate. My export, I am going to claim duty drawback. That should be mentioned in the shipping bill. I mentioned, sir. What rate? All industry duty drawback rate mentioned, sir. Department accepted, admitted. Your shipping bill accepted. Okay. Permitted to export. After department accepted shipping bill, wherein you shown all industry duty drawback I want. That is admitted by the department. After that, no, sir, I am not getting 80%, sir. I am getting only 60%, sir. Therefore, I want to go special brand rate drawback. Not allowed. Once you accepted, I want all industry drawback, same mention in the shipping bill, and that has been accepted by the department, will be granted to you. After that, question of revising of the duty drawback does not arise. This point has been asked in the examination of CMA Final. Now, what percentage of duty drawback you will get here? Sir, we have here minimum and maximum. Minimum and maximum. Minimum duty drawback here is 1% on FOB. FOB of export. All our exports should be measured at FOB value. Then maximum 33% on FOB value of exports. Minimum, maximum duty drawbacks. Now, if there is a case, my dear, there are cases duty drawback not allowed under section 76. Reason? The amount of duty drawback is less than 50. Don't expect. Leave it. In case of negative sale, what do you mean by negative sale? Purchases more than sale. My import 2 lakh rupees worth of the goods. I am exporting after manufacture. That is only at rupees 80,000. Duty drawback not allowed because negative sale. Input tax credit if availed on import of goods, IGST paid. I avail the input tax credit. To the extent of IGST, duty drawback not allowed because BCD not qualify for ITC under GST law, that can qualify for duty drawback on account of manufacture and export the finished goods. Duty drawback amount is more than 1/3 of market value of export, not allowed. You are aware of that? What is the maximum limit I said here? Maximum limit I said here 33%. Means what? 1/3. 1/3 of the market value is the maximum amount of duty drawback. If the duty drawback amount what you claim is exceeded 1/3 of the market value, in that case, over and above 1/3 of the market value, duty drawback is not allowed. Further, duty drawback also be not allowed if you export the goods to Nepal and Bhutan, where the payment realizing in the Nepali rupees, Bhutan currency, then duty drawback not allowed. It should be realized in the foreign currency, where the valuable currency like US dollars, UK pounds, like that. If the value coming sale proceeds, duty drawback allowed even if export to Nepal, Bhutan. If you export to Nepal, Bhutan, the currency is realizing in their respective country's currency, duty drawback not allowed. Further, duty drawback is not allowed in case where percentage on FOB less than 1%, duty drawback amount less than 1% of FOB value of export, then duty drawback not allowed because minimum how much? 1% on FOB value of export. However, if the duty drawback amount less than 1% of the FOB value, no problem, is allowed, provided the value of duty drawback should be more than or equal to 500 rupees. What is this? How to understand this, sir? Simple, my dear friends. Take into account here one case. FOB value of exports 1 lakh. Duty drawback amount 400. Percentage of duty drawback on FOB value 0.4, which is less than 1%. Value also less than or equal to I can see here less than 500. In that case, no duty drawback. Is clear? Then case 2. 1 lakh FOB value of export, but duty drawback is 750. Here percentage 0.75%, which is less than 1%. However, value more than 500. In that case, duty drawback allowed, not allowed? Allowed. As simple as this, my friends, is the meaning of it. That means the value should be more than or equal to 500. If the percentage duty drawback less than 1% on FOB value of export, the duty drawback amount should be minimum 500 above to claim. Otherwise, no drawback. Further, duty drawback is not allowed if the exporter has already availed any other export incentives. Any other export incentives refund claimed, or the other export benefits of a claimed, then duty drawback not allowed. One particular transaction, one benefit only. Multiple benefits causes unjust enrichment. Sorry to say, unjust enrichment. All refund, all duty drawbacks subject to unjust enrichment. If it is not there, then the refund will be given. If it is subject to, if there is no unjust enrichment, then duty drawback can be granted. As always there. Further, if the sale proceeds are not received within the period allowed by the Reserve Bank of India, then the duty drawback what you claim return back along with the interest at the rate of 50% per annum from the day one of the got credit to your bank account as a duty drawback, that should be returned back within that particular time period I am going to mention here, to return back the duty drawback along with the interest from the day one of the receipt of duty drawback. You return back with the interest. Duty drawback amount not allowed if it is exceed the FOB value of exported goods or market value of the exported goods. Meaning thereby, if the goods exported by me on which duty drawback is more than the value of the goods, duty drawback not allowed. For claiming the duty drawback is time limit we have 3 months from the date on which export takes place. If 3 months not sufficient, further 3 months can be considered. That time you have to pay the fees 1% of the FOB value or rupees 1000, whichever is less. Furthermore, 6 months you want to claim duty drawback, means over a period of 1 year. First 3 months no fees. Next 3 months fees 1% FOB value or rupees 1000, whichever is less. After 6 months from date of export, you want to claim by taking further 6 months time period duty drawback, we can make application. That time you have to pay the fees at the rate of 2% FOB value of export or rupees 2000, whichever is less is the fee you have to pay. After expiry of 1 year from the date of export, I want to claim duty drawback, not allowed. As simple as this. Further, interest and duty drawback when any duty drawback payable to claimant under section 74 or 75 is not paid within a specified period of time. What is a specified period of time? 1 month from the date of filing the duty drawback claim should make the payment. Otherwise, interest at the rate of 6% per annum. Amount on which interest payable, amount of duty drawback remaining unpaid to the claimant. Interest from the date after the expiry of the said period of 1 month till the date of payment of such drawback will be paid to the claimant along with the interest. After expiry of 1 month till the date of payment, 6% interest per annum. When the department going to give to you the interest, if the delay happen, refund or not refund, refund are separate. Time limit 3 months to grant the refund. Duty drawback 1 month only time limit to grant. If not, after expiry of 1 month, department should make the payment along with the interest 6% per annum. Duty drawback has been paid to the claimant erroneously, which is now recovering from the person who claimed duty drawback. In that case, specified time period, 2 months from the date of demand of the amount of the drawback erroneously paid or otherwise, 15% interest has to pay by the claimant to the department by returning it. Amount of drawback erroneously claimed is the amount to be meant for computation of interest, and the period, the date of payment of duty drawback till the date of recovery of such payment is the duration for which interest 15% per annum. Meaning what? On 1st January 2024, I claim the duty drawback. Now I am returning back today on 20th of March 2024. Then from 1st of January 2024 till I return back 20th of March 2024, the number of days at the rate of 15% interest I have to pay if I claim duty drawback erroneously, which I am going to pay with the interest from the day one of claim the duty drawback till the date of payment. I have to pay interest is the meaning of it. Time limit to pay within 2 months. The amount what I claim erroneously I have to return back. Duty drawback not going to be recovered by department even though sale proceeds not realized. Sale proceeds not realized. In spite of that, duty drawback not required to return back. When means when here on account of export I have covered ECGC. This point is sometime before and refund chapter I referred. ECGC coverage, Export Credit Guarantee Corporation. My export covered under ECGC. And my Reserve Bank of India said payment not going to realize. The fact notice and written off in their books. And the concerned country, foreign country, the importer country, foreign embassy in India certified the fact of non-realization because of so and so reason, the amount is not going to realize. Then these three are there. Then the amount claimed by claimant as a duty drawback not required to return back. A case of Rajendra Dyeing and Printing Mills. What is it is? This I will refer to you here in the given case. Rajendra Dyeing and Printing Mills, Supreme Court of India said, what is export? To claim duty drawback. What is not export? To claim duty drawback. Which I am presenting here by taking your one of the page from the book. There is a clip is available. That particular clip gives the more clarity to make you understand the subject. Rajendra Dyeing and Printing Mills, Supreme Court of India judgment with regard to duty drawback. Bringing here page number your initial page, basic concepts. See the vessel. Goods has been loaded in the Chennai port to export to USA. The term India defined up to 12 nautical miles. I told you in the last class. Up to 12 nautical miles from the baseline is called Indian territorial waters, also called India. After loading the goods in the vessel before crossing the 12th nautical mile sunk in the water, sunk into the sea. Rajendra Dyeing and Printing Mills fellow says, I have obtained the bill of lading. I am eligible to claim duty drawback. Whether goods exported, the vessel got sink where? Within the 12 nautical miles from the baseline, not cross the 12 nautical miles. Therefore, Supreme Court of India said, in the case of Rajendra Dyeing and Printing Mills, the vessel sunk within the territorial waters of India and therefore there is no export. Accordingly, no duty drawback shall be available in this case. The territorial waters extended to 12 nautical miles into the sea from the baseline. What about if the vessel crossed the 12th nautical mile from the baseline and sunk into the water? Export. You can ask for duty drawback. That is not required to return back if the export covering under the ECGC and Reserve Bank of India written off the non-realization of the sale proceeds and the concerned country foreign embassy in India certifying that the fact has been taken place like this, which is not issued so and so because of sunk into the water while sailing from India to USA, like that. If certification given, if the condition satisfied, duty drawback one can claim and not required to return back, is the meaning of it. Now please come back. Actually, where we are, duty drawback is not allowed cases. Section 76 we referred and we have been concluded this particular point in a simplified manner. We are here. Now I would like to bring to notice one important problem from workbook in this regard to work out. There are so many problems are available, my dear friends. This RTP problem, one of the November 23 RTP problem. Where they are asking to find out the interest amount here. One more problem is the exam problem also is here. You can work out at your end the exhaustive manner the problem, sir. If I take to work out, it takes a lot of time. But I will work out compulsorily the important core issues. Yeah, take this problem. Very important. Because I am referring section 76, duty drawback not allowed cases. Section 75, duty drawback allowed cases. So the combination of this problem is reading as follows. X Limited has exported following goods to USA. Discuss whether any duty drawback is admissible under section 75 of the Customs Act 1962. A, B, C and D product. Value of FOB export given. Market value of the exported product is given. Duty drawback percentage also be given. Note, import value of product C is 9,50,000. Each one is independent cases we can apply. Now in the given case, my dear, if we take product A, FOB value 30% is equal to drawback. So 2,50,000, I will mention here itself, 2,50,000, 30% is equal to how much duty drawback? 75,000. Wait, if there is a case, maximum amount of duty drawback percent how much? Maximum 33%. Maximum here is 33%. Means 1/3. So 1/3 of market value is equal to how much? 1/3 of the market value. 60,000. So maximum amount is 60,000. Duty drawback is allowed. Over and above 60,000, in the given case, 15,000 is there, not allowed. Up to rupees 60 allowed. Duty drawback 60,000 rupees, first case allowed. Second case, B, product 1, FOB value 1 lakh. 75% is FOB value. So 70 means 0.75%, not 75. 0.75. 0.75% is equal to how much? 750. 750 means what? More than or equal to 500? Yes or no? Yes, sir. Minimum is 1% FOB value. Less than 1%, no problem. Value is more than or equal to 500 is there. Therefore, duty drawback allowed here. How much? 750. 750 allowed. Then point number C. Be careful. Imported product C 9,50,000 means what? The value of import, they said here 9,50,000 import value, purchase value. My export after manufacture, how much? 8 lakh. Meaning thereby what? It is a negative sale. Negative sale, no drawback, as you are aware of that. Then product D, 2,000 export value, FOB, 1.5%. 1.5% means 1% is there, minimum 1% is there. So here 1.5% is equal to how much? Rupees 30. Duty drawback allowed? Not 500, sorry. Duty drawback 30 rupees allowed, not allowed? Not allowed. Why not allowed? Less than 50 rupees. See, duty drawback should be here in the given case I referred no ma. Duty drawback should be what percentage? It should be 50 rupees and above. Percentage less should be 1%. More than 1% is also duty drawback. What is the use? Amount how much? Less than 50. If less than 50, duty drawback is not allowed. In the given case, in the product C, no duty drawback. Product C, no duty drawback. Product D, no duty drawback. Product A, 60,000. Product B, 750. Only duty drawback. Answer is available here for your kind consideration, elaborately mentioned from the chapter called duty drawback. With this, I can say that duty drawback is completed for your batch, my dear friends. I will take up further baggage duty, duty and baggage. Then I will take up foreign trade policy to conclude journey on your indirect tax laws for the coming exam of May 2024 or June 2024 examination. Hopefully, tomorrow we are going to conclude the session. Reason, duty drawback is simple lollipop chapter. Then we are going to concentrate more and more tomorrow export promotions, which are very important. Entire foreign trade policy is roll over export promotions. I will refer by tomorrow. Many export promotions I will say already covered. One of the duty drawback is one of the export promotion under foreign trade policy. I will say already covered section 75 duty drawback, one of the export promotion. Like that I can able to link with my existing provisions already explained to you, GST and customs, and 50% of our export promotions already covered. Have not covered section 147 of the CGST, deemed export benefit. We covered under refund chapter under GST law. It's going to come here again. Deemed export. So hopefully the tomorrow will be the last class, my dear friends. Please be attentive to attend the class. If listening today, my students, please do not miss the class by tomorrow. 99% tomorrow is our last class to conclude the session on indirect tax laws. Thank you, my dear friends. Have a good day. See you by tomorrow at 6 a.m. Thank you. Welcome.